This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, June 30, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin is holding its ground at $58,519, but the foundation is cracking. Futures demand has collapsed to 2024 lows, and the broader market has shed $2.42% dollar of its value, leaving the fear and greed index pinned at 14 out of 100. We are in a defensive pivot, where liquidity is fleeing high beta narratives and seeking shelter in established rails. Let's break down what the data shows right now. Looking ahead, the calendar is light on macro surprises, but the institutional calendar is moving. The primary focus for the next 48 hours is the PayPay IPO filing details, which could signal long-term institutional commitment despite the current downturn. We also watch the end of quarter 2 on July 1st, expecting rebalancing flows from institutional funds. Apex, what's the key metric to watch as we close this quarter?
The key metric is whether the PayPay filing stabilizes the narrative. Grid flagged the technical breakdown in Solana and Uniswap, but CIPHER showed the flow into XLM. I'm watching to see if that IPO filing acts as a floor for sentiment, or if the extreme fear reading of 14/100 overwhelms the institutional validation signal. The disconnect between low VIX volatility and high crypto fear is the real story here.
Let's turn to the headlines moving markets today. First, a report from Cointelegraph. Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes. CIPHER, how is this impacting on-chain volume?
This is a massive distortion variable. The 700% spike in Iranian outflows is introducing a supply shock that is likely masking true liquidity depth. We are seeing volume anomalies, particularly in XLM, which is up plus 4.79%. I suspect this is partly driven by sanctions evasion flows rather than organic retail interest, which complicates the flow map for payment rails.
Second headline from CoinDesk. U.S. Senate housing bill includes CBDC ban. Pulse, how does this land in the current sentiment climate? It's a positive signal for privacy and decentralization, but it's currently being drowned out by the extreme fear regime. With the 7-day fear and greed trend rising to 12, the market is too focused on immediate liquidity contraction to celebrate regulatory clarity. The narrative isn't about policy yet, it's about survival. Third, Cointelegraph reports. Bitcoin futures demand falls to 2024 lows. Are institutions exiting the market? SPECTER, what does this structural shift mean for the current price action?
It means the current price stability at $58,519 is unsupported. This isn't retail panic. It's a structural exit by institutions. When futures demand hits 2024 lows, it indicates that large players are hedging or unwinding leverage without triggering massive spot liquidations yet. This quiet unwind creates a liquidity vacuum that makes any bounce fragile and prone to short selling.
Let's start our deep dive with Bitcoin. It's sitting at $58,519, down minus 2.92%. Grid, what does the chart structure tell us right now?
Bitcoin is testing the critical $58,500 support zone. We are seeing a bearish divergence here. Spot price is holding, but futures demand has collapsed. This suggests a lower highs pattern. If this support breaks, the path opens to the $55,000 psychological floor. The volume context is weak, with total 24-hour volume at $77.10 billion. There isn't enough absorption to defend this level against a sustained institutional exit.
I agree on the divergence, but I want to highlight the capital rotation. While Bitcoin holds, we are seeing a massive flight from decentralized finance. Uniswap is down minus 4.98% and ICP is down minus 4.68%. Capital is moving out of smart contract platforms and into Bitcoin and payment rails like XLM. This isn't just a Bitcoin story, it's a systemic rotation away from speculative layers.
And that rotation is the risk. The collapse in futures demand means there is no leverage to fuel a rally. Grid mentions the $55,000 floor, but without institutional leverage, that floor is just a psychological marker. The VIX is low at 18.41, which suggests equities aren't panicking, but crypto is decoupling. This localized liquidity crisis means Bitcoin is vulnerable to sudden unwinds if spot support fails.
Moving to Ethereum. It's at $1,565.80, down minus 2.81%. CIPHER, where is the liquidity flowing in the broader market?
Ethereum is acting as a beta proxy for the broader risk-off sentiment. We are seeing a clear altcoin bleed. High beta assets like Solana, down minus 2.54%, and NEAR, down minus 4.5%, are being purged. Liquidity is concentrating in the most liquid, lowest beta assets, Bitcoin, XRP, and XLM. For Ethereum, the flow data shows a contraction in decentralized finance TVL, as users move funds from volatile smart contract platforms to stable, high-liquidity stores of value.
Technically, Ethereum is following Bitcoin's lead but with slightly more weakness. The minus 2.81% decline is consistent with the market-wide contraction. There is no distinct bullish pattern here, it's a correlated decline. The key level to watch is whether Ethereum can hold above $1,550. If it loses that, it confirms the breakdown of the mid-tier assets.
The sentiment around Ethereum is tied to the broader extreme fear reading. With the fear and greed index at 14/100, retail is hesitant to accumulate Ethereum or its ecosystem tokens. The rising 7-day trend to 12 indicates that fear is deepening. Traders are not seeing this as a buying opportunity. They are seeing it as a signal to reduce exposure. Let's look at the outlier of the day, Stellar XLM. It's up plus 4.79% to $0.18, while the rest of the market is down. Grid, is this a technical breakout?
It is a massive outlier. In a minus 2.42% market, a plus 4.79% move is statistically significant. However, I challenge this to be a sustainable trend reversal without volume confirmation. The total market volume is $77.10 billion, and XLM's move hasn't been accompanied by a surge in that baseline. This looks like a specific flow rotation or a block trade, not a broad market shift. It's a trap if we don't see follow-through.
I see the flow logic. TD Securities sees NYSE tokenization as an institutional turning point, and Bitfinex is reviving tokenized bonds. XLM is the beneficiary of this flight to quality narrative. The plus 4.79% move correlates with institutional interest in tokenized assets and cross-border payments. However, as I noted earlier, the 700% spike in Iranian outflows is distorting on-chain volume. We need to determine if this is genuine institutional accumulation or sanctions evasion flow.
I agree with Grid. This is a risk flag. The VIX is low, so the broader market isn't screaming, but crypto is in extreme fear. Pumping XLM while Bitcoin and Ethereum bleed is a classic sign of capital rotating into a safe haven that is actually just a liquidity sink. If the 700% Iranian outflow shock dissipates, we could see a sharp correction in XLM as that speculative money exits. It's not a buy signal, it's a volatility play.
Finally, let's look at Solana. It's at $73.30, down minus 2.54%. Pulse, what is the sentiment around high beta assets? The sentiment is overwhelmingly negative. Solana is being purged alongside Uniswap and ICP. The altcoin season narrative is dead in the water. Retail sentiment, as reflected in the 14/100 fear and greed index, is focused on capital preservation. There is no enthusiasm for high beta layer ones right now. The 7-day trend rising to 12 confirms that this pessimism is intensifying.
From a flow perspective, Solana is losing ground to Bitcoin and XLM. The minus 2.54% decline is part of a broader minus 2.42% market contraction. Capital is leaving speculative L1 narratives and moving into interoperability and payment rails. Polkadot is down only minus 0.92%, showing that the market is rewarding utility and liquidity over speed and speculation. Solana's decline is a reflection of this risk-off behavior.
Technically, Solana is breaking down. The minus 2.54% move is a continuation of the bearish structure. There is no support level holding strong here. If Solana breaks below $72, which is near its 24-hour low, it opens the door to lower levels. This is a high beta asset in a low liquidity environment, which means downside moves can be sharp and fast.
Apex, bring it all together. We have Bitcoin holding $58,519 on collapsing futures, Ethereum at $1,565.80 amidst decentralized finance outflows, and XLM at $0.18 defying the market trend. What is the strategic picture?
The strategic picture is a defensive pivot. Grid flagged the technical breakdown in Solana and Uniswap, and CIPHER showed the flow into XLM and Bitcoin. SPECTER warned about the liquidity trap created by collapsing futures demand. The market is not crashing, it is contracting. Capital is leaving high beta speculative assets and moving into low beta, high liquidity stores of value. The pay IPO is a long-term signal, but the immediate reality is a 14/100 fear and greed index and a 2.42% market cap contraction. The data shows a market in survival mode, not growth mode.
To recap, Bitcoin is testing critical support at $58,519 as futures demand hits 2024 lows. Ethereum is following the broader market down to $1,565.80, pressured by decentralized finance outflows. Stellar is outperforming at plus 4.79%, but we are cautioning that this move may be driven by institutional tokenization narratives and geopolitical flow distortions, rather than broad retail fear of missing out. The overarching theme is a flight to quality and a contraction of speculative risk. Thank you for joining ShadowQuant Crypto Edition. Stay analytical. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.